I can't hear you, please. Yes, sir.
Okay. Can you hear me now, please?
Yes, I can hear you.
Okay, good, good. So let's mute our microphone so that you can hear me now. So if you can hear me, I can shoot. It is not good for us as forest trader who are based in Nigeria not to know what exactly is happening to our currency. So in front of you, you will see USD Naira. The pair in front of you is USD Naira. You must know what is happening to this currency and why everybody is being affected in the country and why we are looking for a way out of this calamity that has befallen our dear country, Nigeria. So I needed to use this as a teaser to let you know the importance of what we are doing. This is USD Nigeria currency, USD Naira in front of us. And you can see that, in fact, I can't even put this thing on a daily chart or weekly chart. You won't see anything. So I had to put it on a monthly chart for it to be captured. So the history dated to around 1997 when our currency was actually doing well against the US dollar at 81 or roughly at about 82 Naira per dollar. That was in 1997, 98. And it was probably stable. And till around February 2009, there was a sharp rise in 2009. And again, it stabilized, since 2009, maybe around March or thereabouts, March, April 2009, till around 2014, before Jonathan relinquished the seat to Buhari. And when Jonathan was going, I think we had some rough parts also, because you could see that October 2014, it went up sharply and it stabilized thereafter. So we still had it at about 202, 204, 2015 before Buhari came. And thereafter, Buhari came, it stabilized almost in a straight line. And boom, in 2016, the price went so high and high. It was a very bad history. Looking at the history of Naira against the dollar, it went so sharply up, within 2 months or 3 months, because each candle is like 2 months. It was even, June was the worst month for Nigeria. June 2016 was when everything went sour. Then July and August, Naira tried to pull back, but it failed. And now, May last year and this year again, Naira continued to lose its grip. Nobody wants to trade a currency like this, because if you look at this currency, there is no correction whatsoever in this currency. It shows typically of a structure or a currency that is so weak that cannot even do any correction against the cold currency. So the cold currency here is the USD, but no correction whatsoever, apart from dragging on a straight line. Then you now have a shoot up. No corrections. So there is no way you're going to read this particular currency and say you want to trade it. So there's nobody who wants to trade it. But the reason why I had to bring this up is to show you this is our life in Nigeria. This is our history in Nigeria. And this is what we are looking at in Nigeria. So when you see this currency, I can only tell you that we are heading before December. This currency is going to head towards 900 to 1,000 naira to a dollar. So that is where we are heading. And it is more reason that you must pay every attention to learn Forex and to be able to at least have dollar in your pocket. So the money you want to have in your pocket is dollar and not Naira, because it's not stable. It's not stable. If anybody had $1,000 here in 2014, or let's say $10,000 in 2014 at 164, compared to what it is now, you must be, you know, eating your close to billion. You know, it's really rapid rise against the currency. So if you put energy and time into learning Forex, it's going to pay up, pay up, because I don't see this currency gaining any strength. From the history, from the inception, you can see it's been rising, and probably a little correction here at this point. And ever since, it's a sharp rise and a sharp rise and a sharp rise. So it's not going to come back. So let's devote time to learn. So let me go to what I have to teach us today. I just want to show you Naira and why it's important for us to learn Forex. Let's go to what we have today. I'm going to go into DXY. DXY forms the basis of a whole lot of things for us. This is the chart of DXY. Let me quickly switch to the weekly. I have told us once that whatever the DXY, whatever we are seeing on the DXY, this is DXY. For those joining us now, what I actually showed us was the fact that Naira had collapsed badly, and others, they've been able to see that Naira actually collapsed badly. So this is DXY. DXY will form the basis of what we're going to do here. Now, I think I can't just reduce this anymore. We must be able to know what correction is, what trend we are in. So if you are able to understand what correction and how much correction we can have in any trade, I think you will not be sweating anymore. You will not be sweating anymore. The inception of this trade, of course, okay, I think it's still loading. We still have some of it loading. It's still loading. It's still loading, but unfortunately, I can't wait for it to load. If you can hear me, or I will just continue. Can you hear me? Just one person just speak up if you can hear me. So just,
Yes.
okay, thank you.
Exactly, sir.
Okay.
We can hear you, sir.
Okay, so from here down to this place, that's a move. That's a move down. Okay, you have a move down here. This is an impulsive move, a move down. I won't be going to so many structures today, but I want us to know what correction is and how we go about trading correction. So we had a move down here up to this level. This is the lowest level. From here down to here is the move. Now, what you have in the middle here is a correction, you know, a correction, which you can call a complex correction to give rise to another correction, you know, to move up. Temporarily, we had a switch up, okay? We had a correction. After this move, we had a correction, ABC correction. You can call it an ABC correction. Okay, if you see from here to here, down to this place, down to this place, this is like an expanding flat correction here. So if you look at this and this and this, and so, and from here to here, another correction, from here to here, another correction. So, and we broke out of this correction to now form what looks like a trend. Yeah. So this is like a trend. So the uptrend. Now the uptrend in itself also is a correction to this. But before you can say that, oh, this trend has changed from downtrend to an uptrend, this correction had to at least go past 61.8 Fibonacci retracement. So if you take our Fib tools, because we are retracing, we are going to start from where that wave started from here, and we take it down to the lowest. I think the lowest I can think of is here at this level, where you had this, where my plus sign is. So let's just take it there. So that's my lowest for now. And so the retracement of 61 fib is at this level where you have my finger. So let me pick something. So this is where my fib will be. That is where my fib will be. So if I put my fib there for 61.8 for that move, so you can see that the price didn't get to that level at all. So we are still in what? In a downtrend. So
hello, Dr. Gowali.
yeah.
Can you just hide your moving averages since you're on trading view? So
Okay,
the
okay.
chart to be clearer and less
Okay,
whatever.
okay, let me just do that. Okay, so let me just do that. So, like we said, from here to here, this is a move down, and the 61.8 fib retracement is at this level. So, of course, we have not broken upside to say, okay, we are changing the trend for good. But what we are doing is still a correction. So, like I told us the last week video, that when there's a move, the move, an impulsive move, is for a short time, but most of the time we correct. And so if you don't know how to trade correction, so there is nothing you're going to get from the market, because most of the time you are expecting a big move. You won't get that all the time. So, but most of the time the market is correcting. So we have to look at this from different time frame to know how to engage the market. Now, so after this correction, we add another move to the downside. So this is this move here, from here to here, is correcting this wave here. So we have the second move. So this is the first move, number one, the second move to the downside. And we had something similar to what you saw at this level. At this level, you have this correction, and again, a breakup also on that time frame. So what is DXY itself? DXY just tells us about the strength of the dollar and what is happening to the dollar. So our dollar is faring against all other currency. So the DXY has been going down. So we are going to look at what is the fib retracement of this new move, because we have not even retraced this new move. We are at the process of retracing this new move. So to look at the fib retracement, we're going to come from where the move down started from the tip. There's a tip here, a tip. You have to put it correctly at the very tip of that, down to where the last low here, which is at the tip of here. So now we are going to look for the 61 fib, which is at this level. This is 61 fib now at this level. I will be changing the color of the new one. This is 61 fib at this level. I will be changing that color. Now, let me now put it at, let's now get again the 78 fib. So if the price is able to move beyond 78 fib, then we can begin to tell ourselves that dollar is gaining strength to actually push up. So in that pushing up, of course, dollar would have to overcome this first. And after overcoming this, and if it should go beyond this, then we cannot begin to talk of a change in the direction. But for now, the dollar is still relatively weak. So now let's take it one step after the other. Now, again, whatever we see here is nothing but a mirror of what happens in the Euro USD. Euro USD is an inverted inverse of the DSY. So where you had this on the DSY is going to be up here on the Euro USD. So you can use Euro, whatever is happening in the DSY, you can use it to determine what is happening, you know, in the Euro USD inversely. Now, the price had touched, it has touched 61.8 fib of this retracement. And unfortunately, at that level, you had a double top. This is one, and this is of recent, which is a double top, and the price had been falling. Now, for us to know where the fall is going to get to say that, okay, maybe this currency is going to still go further down, let's plot where the 61.8 retracement of this move, entire move, will be. If the currency should get, if dollar should fall to that level and below, we are telling ourselves it's going to go down again. It's going to go down again. To do that, let's take our fib retracement. Now we are retracing down now. So we take it from the low here. We took it to the highest level at this point. So my 61.8 fib, let me now use another color for it. For these, I will be working between 50 and 61.8.
Sorry, please come again. Please come again.
Okay, I will come again. Now, what we've been doing is to retrace, you know, 61.8 fib level for any wave that you see in a chart. It's a critical level that tells you there is a change of trend to the other side. So once you cross 61.8 fib, you are telling yourself the trend on the longer picture has changed. That is what you're telling yourself. So for this move, it's a down move, a sharp move. The retracement of 61.8 fib of this entire move is at this level. Price didn't get to that level. And this is the retracement here. So thereafter, we had another switch down. Now, we want to now capture the retracement of the move from here down to the lowest here. Now, the 61.8 fib retracement of this move, the second wave down, is here. So this is 61.8 and this is 78. Most of the time, if price should go beyond here, it's marking the beginning of a switch in the direction of this pair. But for now, the price is altered at 61.8 fib. Remember, this is the weekly chart. You must start with the weekly chart to understand the big picture of what is happening. So I'm taking it one after the other. I did something like this last week. Now, but within the retracement itself, within this retracement that is now turning back here for a change of direction for now, this retracement, we want to see how much pullback we're going to have against it. If this should get to 61.8 fib and below, it's telling us that price is not, most likely will not continue to rise. The dollar will continue to fall. But for now, there is a sell-off in dollar. That is where we had this, or we have this move to the downside. So 61.8 fib and 50% fib. These are critical level to watch for price action, you know, when you are dealing with price. So 61.8 fib pullback is here, and the 50% fib is also at this level. Good. So now, these levels are critical. And for me, I would say probably we're going to have this the point we expect price to get to and begin to turn back up is at the level of 90.60, which is historical for DXY, which is really above 50 pip. So this level is like 80 something, and at this level is like 91. So 90.6 is around here. We're going to see that on a bigger picture. But for now, with what I taught us, if you draw your trend line from here straight, this is how to use trend line really. On a higher time frame, draw a trend line to cross this. If you draw a trend line to cross that from that move, you know, the price had been going up and bouncing off this. So drawing a trend line like this tell us that, okay, this thing has broken down and is most likely going down. But how far will this new move go? That's another thing that we're going to do. How far will this new move go? I had to first show us this, how to draw this trend line. How far will this new move? But in dealing with this wave, because if you are going to, it's better to pick your trend line on the weekly wave for wave. You pick it wave for wave. But considering this wave, this correction, and this wave, together we sum these three to know that there is a shift downward. But now, this shift downward, how far would it go before we have a switch back upwards? And this is what we do. We have to do this. Now we are going to consider this wave. This is the wave we're looking at now. We're going to consider this wave. So we take, because we are selling now, we're going to consider this wave. This is the wave we are going to take, the weekly wave. You put our trend, you take it to this level. That's where we take it to. That is how to draw it on the weekly. So, and because we are selling, if you get this, there's nothing you cannot get. So this is how we get it. So all these are big, big moves, which you don't want to, you must understand. Now, there's a big move up here. We add this correction, a big move, and a down, and this down, and this. Now, with what I taught you the last time, you can look at this as an ABC correction or a WXY. This is a wave down, a corrective wave in between, where you have all these waves are three waves. These are impulsive wave of 5 waves down. Oh, sorry, 5 waves down in the opposite direction. So opposite, in the same direction that the price is going recently. So in the same direction, the 5 wave down and a correction of 3 waves up and another 5 wave down. So if we think that this one is an ABC wave and is not, if we want to, this section alone, because if you consider the whole section here of correction is a WXY correction in the whole mix here, because there are so many flats correction here, zigzag correction, you know, in this mist. After this wave, we have this correction. So if you're going to consider the entire picture here is a WXY correction. But now looking at this here and here, we can relate to these 3 wave 1 and 2 and 3 as an ABC correction. Now, in an ABC correction, we expect this wave to be equal in length to this wave. So let's look at it. If I take it from here, from the tip here, and I take it down to this level here, that's the level here. So let me use a color for it. Ooh, which color should I use? Let me use black for it. So if I take that, I should be able to bring it down from this level to this level. So looking at this, it is still short of what I expect. It is short of what I expect. So eventually, this might be forming like another flat in the making. So it might be forming like another flat correction in the making. Why I think it's another flat correction in the making is this. Let me take this off. If you take this one as wave 1 and this as wave 2, what we are told ourselves is that when you have this as wave 1 and this as wave 2, and you want to connect what do you call it now? A channel. This and this, and the O wave will be contained in a channel. If you are dealing with an ABC correction, it should contain in a channel. But when it's outside your channel, then it's no more an ABC correction. So it's looking like a complex correction or a WXY correction. Now, the reason why I say this is not an ABC anymore is because of the price cannot go down. For me to draw my channel in the first place, let me do something. What I taught us, for us to draw a channel, let me take this away. For me to draw a channel, let me pick a channel so that you understand. What I taught us, where is channel now? Where is channel? Where is channel? Where is channel? Channel is not here. Channel should be here. Channel, okay, channel is not here. Where is channel? Let me check this place. Channel is not here. Channel should be here. Okay. Okay, this is channels. So this is parallel channels. So when you pick these parallel channels, the end of the two waves is what you first connect. You know, wave 1 and wave 2 ends there. So you connect this base to this base. That's the way you draw a channel. And you now take it to where A, the first wave ends, okay? So that's the way we draw a channel. So you connect this is wave 1 and this is wave 2. So the origin of wave 1 and the end of wave 2, you connect and you draw it back to where wave 1 terminates. That is how to draw a channel. So let's see if this thing is going to form within the channel. So if it falls within the channel, so you can still say we are dealing with ABC correction. So I'm not going to move this one. It's better I move from here to extend such that I capture that. So in capturing this, okay, I think we are still within the an ABC correction. So it's still an ABC correction that is still in the making, okay? Okay, you can still see that it's still within this channel. Once it's completely outside this channel, then it is not ABC correction anymore. But another thing that is telling me that it's not an ABC correction is that I'm having a double bottom here. And with this double bottom, it means that the price most likely is making a U-turn temporarily to the upside. For how long, I don't know. But now let's deal with, once the time goes off, you know what to do, just connect back. So I have to take this thing back now. This is how we analyze. I have to take this thing back to this place, okay? Taking it back, I know that with this is a double bottom. A double bottom to me signifies that there is a switch to the uptrend for now. There is a switch to the uptrend for now. Now, dealing with this switch to the upside, you don't want to sell. You don't want to sell DXY. You want to buy DXY. What we are telling ourselves is that dollar will be gaining strength with this move. Okay? Dollar will be gaining strength. I want you to understand what we are doing. Dollar will be gaining strength with this move. Now, with that now sorted, we want to see that for now there is a sell-off in dollar, and that is why the dollar is falling. And why dollar is falling, we want to see what is going to happen to the other currency. They will be gaining strength. So we look for important levels when we understand structure, how to engage price. So with this now, this is a new move. We add this move to the upside, and when you have the first move, usually it's not good to say you want to jump in. Then we had a sell to the downside, and with this double bottom confirmation, we can tell ourselves the price is going up. It would be difficult for us to say we want to draw a trend line for us. We have to make sure that this pullback to the downside is completed before we draw a trend line. But we can still put a temporary ones to, there. Now, dealing with this wave now. So you can see that on the weekly, when this happened, we had something that looks like a morning, an evening star, which pushed the price to this level. Now, something of such also had appeared again here, an evening star. So when you see this like an evening star, the picture will be different on the daily and the 4-hour, chart. So when you see that an evening chart like this, you don't want to joke with it because it's going to probably pull the price down to a reasonable level. And we are going to look at the nearest resistance that you expect that price is also, there's a support that we expect the price to get to. But in dealing with this, I think the best way to still look at this, you consider this as wave 1, and you're going to have a wave 2. That is the best way to still look at this. You are looking at, because this is an impulsive move. It's a strong move. And you didn't have that at this level at all. And when you are dealing with price and you want to probably engage price, if you have not seen anything that looks like a very strong move, you can't say, oh, the price is not going to come back. I think with this move, we can tell ourselves this is wave 1 here, which terminates here. So that way, because we are buying, DSY is gaining strength, we can pull this as wave 1. We can put that as wave 1, which has ended at that level. Then we are looking at, if it's wave 1, where would wave 2 terminate? And where would wave 3 go? Two. And wave 3. All these we're just trying to speculate based on there are so many things we're going to do. So now, so with this, we expect a pullback to 61.8 fib. That's what we expect with this, between wave 1 and the retracement of wave 2 at that level. So we pick our fib, we start from the tip here, and we come here, and this is where we expect that 61.8 fib to rest at this level, at that level. So we are telling ourselves that price, I hope you can see, you can all see this. Let me use this. So we are telling ourselves at least price should come to that level. And one way or the other, it has agreed with what I think is the strongest level of support. Because the strongest level of support is where you have this week. It has agreed with where we had this week here. You can see the week at this point. So it has agreed with that level. So when you see a move like this, you can see price still want to go down all the way to this level before you now have a rally back up. And this is a big move from here down here is a big move. Which other currency pairs are going to gain strength against the dollar, and there's going to be that move. But within that move, we're going to see what exactly is playing out in the DXY. So if you're going to project that, okay, after the price gets to this point, where is price going to go next at least? We expect an extension of wave 1 plus 2 at 1.68, 1.618 fib extension. So if we pick our extensions to, this is the extension 2, we first come to where wave 1 start from, we go there, we go to where wave 1 ends, then we come to where we expect wave 2 to terminate, which is at this level, to pick our 61.8 fib, which is here. So this is 61.8 fib that we expect, at least maybe if dollar is going to do something, it will get here. Let me change this one to green for the price. So we are thinking that if that works out, what is this now? If that works out, this is where price will come at least for us to have that move. So all these are, we are forecasting, we are projecting what is going to happen. So we are projecting this move. Of course, all these moves, move from here down to here, might take 3 weeks. Just know that. To move, to touch this place might take 3 weeks, and we might have just some, a whole lot of things happening here. But for now, dollar is temporarily getting weak, so. Now, let me now switch.
Hello, doctor.
Yeah. Okay.
Sorry, please.
Yeah.
I mean, this is brilliant, very, very brilliant analysis. However, we must also project that whilst we think what is developing is an impulse wave,
okay,
the possibility also could be that it could drop below that 618 and still go again to touch the bottom. Even at any rate, wave 2 is not bound to complete at 618.
Yeah.
The only rule I think is that it must not cross beyond 100% retreatment.
No.
Yeah, 70 to 100%.
No, 78. 78.
All right. So
once you go past 78, then you are talking of flat and all of this stuff.
Yes. Okay. So I wanted you to put that also.
Yes. Yes.
I want you to put that also in perspective. But one thing we know for certain, that is really certain now, is that with the evening star formation, we are bound to go down.
Yes.
We are going to enjoy going down and weakness over the next 3-4 weeks. Okay.
Exactly.
All right. But otherwise, it could fail and may not be an impulse at the end of the day again. That's what I'm trying to say.
Yeah. It might not be, but from what I've seen, when you see a candle like this, you don't want to underrate this candle. But we'll see, and I will still come to what we do. You see, analysis like this